You're listening to the Cash Podcast, creating affluence, success, and happiness with your financial surgeon, Adam Koos, President and Portfolio Manager at Libertas Wealth Management Group at libertaswealth.com.
All right, everyone, this episode's going to be a little tough to listen to, and it's not because it's sad or scary. It's because I really wanted to do an eye-opening, educational episode that clearly shows some of the absolute terrible financial advice you're all getting when you watch the financial pornography networks, as we call them here in our office. Like, this is CNBC, Fox Business, Bloomberg Television. When you read those fear-mongering newsletters that some of you send me throughout the year, those ones that promise that the end of the world is coming, or that the dollar is going to collapse next month due to some supposed congressional bill that was signed last summer, and this is not true, by the way, but these are the kind of things I see. Or when you go to the magazine racks, or maybe you're an online subscriber to Time Magazine, Bloomberg Business, or any of the other big name, trustworthy media outlets that have become so, relied upon over the years. The reason it's going to be a little tougher is because I am going to be showing pictures of magazine covers. So if you're listening on Spotify, if you're listening on iTunes, I'm going to try and talk you through what I'm looking at. If you want to come back and check them out on YouTube, that would probably be the best thing to do. But just keep in mind, I am going to reproduce this podcast as an article as well, again, because it's so visual. But I'm going to be showing you some magazine covers, some charts, and it's going to be really interesting here. But the point that I want to share, and the point I'm trying to make, or I'm going to make pretty clearly today, I think, is that oftentimes these magazines are wrong. And not just a little wrong, but dead wrong. And even more often, some of them have the worst possible timing. So let's get into it here. But before we get started, as always, a few housekeeping items. If this is your first time listening or watching, thank you so much for joining us. I'm Adam Koos, President, Portfolio Manager, and Senior Financial Advisor at Libertas Wealth Management Group. And you're listening to the soon-to-be renamed and rebranded Cash Podcast. While the name is going to change, by the way, you'll be the first to get these episodes if you subscribe, so please be sure to link up and subscribe on YouTube, Twitter, and Spotify. And you can follow me on Twitter at Adam Koos, as well as Instagram at Financial Surgeon. If you'd like to schedule an intro call to confidentially discuss your financial situation in more detail, or if you'd like to get a second opinion on your retirement plan and or investment portfolio, head over to our website at libertaswealth.com. Just click on that button that says click here to get started, and someone will reach out to get something on my calendar. Last but not least, all links, visuals, charts, and other educational resources are always available on our website. So let's go ahead and get started here. So magazines that predict the market. Time and time again, magazines tell us exactly what not to do. That's what we're talking about today. And as always, I'm going to start with a quote of the day. And this is perfect. Bob Dylan said, "Sometimes it's not enough to know what things mean. Sometimes you have to know what things don't mean." And that's going to go right into our discussion about the markets, financial media, financial news, the things that you see that get put in front of your face that perhaps already tug on emotions that have been tugged on. In these days, I think it's all that much more applicable when you look at the political climate we're living in, the economic climate. We're already in a recession. If anybody tells you there's going to be a recession next year, just tell them we're already in a recession. So more fear mongering, we'll call it that. But let's jump in and talk about this first chart here. Here's kind of the gist of what we're going to be going through. These are old magazines going back in time. I went back as far as the 70s. We can go back further, but a lot of the good media outlets started putting out magazines and putting great, very catchy covers out in especially the early 70s. So we're going to start with this one. And for the people on Spotify and Spotify and iTunes, what we're looking at here is a Newsweek cover, a Newsweek magazine cover on the right. And the Newsweek cover says, "How far is down?" And it's basically talking about, obviously, a market crash in the early 70s. And back in these days, and this is 1974, 1975, we had a ton of volatility in the stock market, and we had runaway inflation. Does this sound familiar? I'm going to pause for a second. I would think that would sound a little bit familiar today. Well, on February 21st, 1975, Newsweek came out with a magazine cover that said, "How far is down?" And as you can see on the chart, for those of you watching on YouTube or for those listening, the chart shows that this Newsweek article came out in March of 1975, And over the course of the next several months into the next year, the market just went up. Ultimately, it went up. Now, were there some downtimes? Of course, the market doesn't go straight up, right? But the market went up between February 21st of 1975, and at the end of the chart here, I'm looking at May and June of 1976, and prices were higher. So this is what we're going to talk about today. We're going to talk about how news and magazine and financial news, they'll throw an idea at you, and in most cases, I don't want to say they're being intentionally wrong. They're not trying to mislead you, but they're trying to create shock value. And that shock value is what keeps us listening, watching, reading to whatever the news outlet is. And in this case, it's Newsweek. So let's go to another one. The next one here is Business Week. This is in 1979. So back in 1979, we have this Business Week cover. I'm going to read it out here to you. It says, "The Death of Equities," in other words, stocks. So Business Week, "The Death of Equities, How Inflation is Destroying the Stock Market." So that's the article that came out on August 10th of 1979. Now, the market went up from August through about the beginning of October. It went back down again, and it breached the August lows, or July lows technically. It headed higher and printed higher highs into early 1980, so just several months, not several months, but a few months later. And then it dropped one more time into March of 1980. So between August and March of 1980, there was volatility, but the market never really went down that much further than it already had been. In fact, the May of 1979 lows were never breached. We saw, again, the lows of later on that year, in mid-year, so I'll call it summer of 1979, those lows were breached in November, and the lows of 1979 and November of 1979 were breached just barely. I mean, we're talking 3-4% maybe in March and April of 1980, we'll call it 6-7 months later. But at the end of the day, what we're seeing here is 16 months later, the market was up as much as 32%. So instead of all the fluff here, let me summarize that. Business Week comes out on August 10th of 1979 with an article on the front page that says, "The Death of Equities, How Inflation is Destroying the Stock Market." And if you would have listened to that magazine cover and said, "You know what, I'm not going to invest money. I'm going to leave my money under the mattress. I'm going to leave my money in the bank account. I'm going to leave my monny in bonds." Heaven forbid you leave your money in bonds. We're not going to talk about that today. But with bonds being down 20% in the U.S., corporates being down, call it almost 42% at the low earlier just a month or two ago. U.S. Treasuries being down almost 48% just a month or two ago. I don't think you want to be in bonds anyway, but that might be changing too. Just full disclosure, I'm keeping my eye on the bond market here, but I'm going off the rails like I sometimes do, so I apologize. But bottom line here, August 10th, 1979, Business Week, "The Death of Equities, How Inflation is Destroying the Stock Market." You may have done the absolute wrong thing and the worst thing you could have done, which was listen to the magazine, sell or just don't buy your investments, and leave your money sitting in cash. And again, 16 months later, your portfolio, if it were invested in 100% in the S&P, which most people don't, but even if you look at the market was up almost 32%. 16 months later after this magazine cover came out. Here's another one. So this is after Black Monday. Black Monday, the market went down. It was the biggest drop in history in one day in the stock market. Naturally, everybody's freaking out, right? So you've got October 30th of 1987. This is after the Black Monday crash. And I've got a little arrow pointing to the point on the chart where it's at here. For those of you watching on YouTube, you can see it. For Spotify and iTunes listeners, what we're looking at here is Time Magazine. And it says, "The crash. After a wild week on Wall Street, the world is different." And the magazine cover is red and black. It doesn't get much more doomsday than this. So on October 30th, 1987, Time Magazine runs this cover, "The crash. After a wild week on Wall Street, the world is different." And 2 years later, the market never saw a bottom again. It didn't see another bottom, except for we'll just say maybe a month later, there was a pullback back to the October lows. But other than that, very, very short-term time frame pullback. All the market saw were higher highs and higher lows over the course of the next 2 years, and the market was up more than 40%. 40% the next 2 years. I don't know how many of you, considering what we've seen this last couple years in the market, would take 40% in 2 years, but I would take that all day and then some. So again, not exactly the best advice here. If we're looking at these magazine covers, they might be just creating more fear and causing us to make more mistakes on top of potentially mistakes and hesitation and procrastination that we're already making. Here's another one. This is one of my favorites. This is 1998. So in 1998, about halfway through the year, just past halfway through the year, the market started going through a pretty big drop. It was almost 20% the market dropped, and it did so in pretty quick fashion. So I think after the market had been going up so much over the course of the early 90s, I think people thought this was the end. This was the top of the market. So when this took place, when we started to see this drop in the market, Time magazine comes out with a cover and it says, "Is the boom over?" And that's not enough to describe this magazine cover. If you're listening on Spotify or iTunes, it shows a stock market graph going up with these crowds of people in balloons walking and crowded to the top of this stock market line graph. And then it shows the graph going down in a very vicious fashion and people falling head over heels down this graph. And I mean, it is dramatic. I mean, this is a dramatic magazine cover. This came out on September 11th of 1998. And the market, 1 year later, the market was up over 34% and almost 55% by the peak of the dot-com bubble. In other words, the portfolio, if invested in stocks, just in the S&P 500, would have gone up an additional 50+% by the time the market peaked in 2000. If you just ignored this magazine cover and didn't let it scare you. So this is kind of, I don't mean to be laughing, but this is crazy. I mean, this is borderline on just bad advice. I don't know, it's terrible. But anyway, so that's Time magazine. I got another one for you here. So this is the exact opposite of what I've been sharing with you so far. So here's another Time magazine cover. The cover says GetRich.com, Secrets of the New Silicon Valley, and it's got all these people, faces smiling on it. You know, a guy with a baseball cap, you know, insinuating he's outside having fun. Somebody looking in like the reflection in a rearview mirror of a car, insinuating maybe they're traveling. So the whole point of this magazine cover is, you know, in September 24th of 1999, when this cover ran, you know, the market was doing very well. You know, keep in mind, by the way, we just got done talking about the what was the last one here? Is the boom over? We just got done talking about is the boom over cover, also by Time magazine, insinuating that a collapse was imminent. And now they're talking GetRich.com, talking about Silicon Valley stocks, how great .com stocks are doing. And this is September 24th of 1999, which ironically enough was not too far before the peak of the market, which was in March of 2000. So just a handful of months later, after this magazine cover runs, the market goes down 47%. From the peak of the market in March of 2000 to the bottom in March of 2002. So there's another one, but instead of scaring us out of the market, this one's almost encouraging us into the market at the worst times. Here's the next one. Again, I'm choking on the irony here, but this is a Time magazine article again, and it's you got a picture on it with a lady on roller skates, you know, with her delivering cheeseburgers and Cokes, and there's a kid inside of a car, and he's laughing, and the lady on roller skates delivering cheeseburgers is clearly elderly, and she's got a pencil in her hair, and what the magazine's basically trying to say is that, you know, you've got to go back to work. You know, the market's down 47% from top to bottom. You know, are you? And the cover says, "Will you ever be able to retire? With stocks plummeting and corporations in disarray, Americans' financial futures are in peril. Here's how to make the best of it." And this is on July 26th of 2002. And when we look at this again, the market bottomed in March of 2003. And so keep that in mind for a second. So in July 26th of 2002, which I'm going to say is 9 months, I don't know if my math is perfect there, 9 months before the stock market bottom, the Time magazine's running covers about how you're never going to be able to retire. But what happened? 18% was the gain in the stock market a year later, and 2 years later it was up 30%. So I think that you're probably starting to catch the drift here. Trying to catch what I'm trying to pitch at you. The pitch I'm trying to throw is that maybe we need to spend more time watching the market and focusing on things we can control, as opposed to worrying so much about the things we can't control. And furthermore, whenever we're looking at news or any kind of prognosticator, any kind of Nostradamus who thinks they have the answer and can predict the future, I think we should all just know, because we've known our whole lives, that nobody can do that. One of my quotes I have in the conference room here in our office says, predicting the future is especially difficult. Oh, I'm sorry. It says prediction is especially difficult, especially if it's about the future, which is funny, but it's true, right? So here's another one. This is again, antithesis of what we were talking about to begin the discussion today on the podcast. But this is a Time magazine cover with a guy holding a house. He's giving it a big, huge hug. He's cuddling with it. And the cover says, "Home Sweet Home, Why We're Going Gaga Over Real Estate." This article, or this cover, published June 13th of 2005, which was just about, I'll say, a year, maybe a year and a half before the market peak. So what we're looking at, for those of you that are listening, is the S&P Case-Shiller U.S. National Home Price Index, which is a good proxy for home prices. And this magazine cover ran after a huge run-up in real estate, not before. It's not giving us good advice. It's telling us the wrong thing again. Here's another one. Time magazine. This is October 10th of 2008. So not quite the market bottom, but the market had already gone down quite a bit at this point. Market peaked in October of 2007, and it continued down from until it bottomed in March of 2009. But the Time magazine cover says, "Time, the new hard times. No, this isn't the Depression 2.0. New history can help us avoid it." So I don't know if a cover on Time magazine with a bunch of people lining up at a soup kitchen is exactly the best, imagery that we want to send the public or people who are investors and encourage them to do the right thing. But the market was getting pretty close to bottom here at this point. It had already gone down quite a bit. And 1 year later, after this magazine cover ran, which again, it ran on October 10th of 2008, 1 year later, the market was up 19%. And 2 years later, it was up almost 30%. So it's the same story over and over again. And it's not just the stock market, by the way. Here's a recent one. So this is just this year. Barron's ran a cover, and it has a $1 bill on it with George Washington's head put on a bodybuilder wearing a singlet, like a wrestling singlet. He's all buffed up and huge, biceps busting. And it says, "The powerful greenback. The U.S. dollar is near a 20-year high. Who it helps, who it hurts, and 8 ways to invest now." And then there's this other one. It says, "Bloomberg Business Week. Can't stop, won't stop." And it looks like it looks like this disco imagery of the U.S. dollar busting through all the other world's currency symbols into the foreground. And and this is October 10th of this year. The U.S. dollar, it didn't quite pick the top. These magazine covers didn't come out literally on the day the market topped, but one of the two came out October 10th. The other one came out just, I think, like a week or two before. But October 10th was the second lowest high of the year. And so the market, the US dollar peaked in September, and then it fell back, pulled back, and it tried to head higher. It couldn't. And what we're seeing is the US dollar's down, I'm going to say right around 12% as of this chart here that I published. So again, just magazine covers telling us exactly what not to do. And then there's this one investment news. This was 2021, but in October 25th to 29th of 2021, investment news. This is more of a trade magazine for us, for financial advisory firms. It comes out and it says, "Keep calm and retire later." So again, just more kind of fear mongering. Granted, this is a financial advisory for magazine. This is not for the public, and it's obviously a whole lot earlier than what we saw, obviously, in these public magazines. But the last one I want to show you here And for those of you listening, this is a big, huge, long list of magazine covers going all the way back to 1972. And it's showing when the magazine covers were published. It's showing what the stock market was doing at the time. It shows even more magazine covers above. But the point is, there is always going to be reasons not to invest your money. There is always going to be reasons to sell your investments because you're scared, because you're watching the news and something, it creates fear. And it's understandable, by the way. It's not bad. It's completely natural, and it's human emotion. This is how we're wired. We're emotional beings. But there's always going to be another magazine cover next month, next year. There's always going to be another chaos in the market. There's always going to be some reason for volatility. There's always going to be some new crisis that somebody's or some group of people is going to want to take advantage of, and they're going to want to create even more fear mongering. So you pay closer attention for their ratings and buy more magazines and subscribe to more online newsletters. So only the dates change, but I mean, as Mark Twain said, the past doesn't repeat itself. It's but it sure does rhyme. So and when we look at this year, as I keep saying in our market update letters that we send to our clients every month, our monthly market briefs, as I keep saying in our market commentary, our quarterly screencast, a market update is going to be coming out. The market outlook for 2023 is going to be coming out here in a few weeks. As I keep saying, I think we're closer to the end of this bear market than we are the beginning of it. So I think we want to be very, very careful not to look at these magazine covers and not to look at these the political news especially, but not to look at all the different things that are being thrown at us on our phones, through email, on TV, on the radio, and allow these things to scare us out of what really matters, which is the things we can control, which again, it's how much we save, it's how much we spend, it's how patient we are, and as things go out into the future, the more time we give this market, the further out we go into the future, the higher the probability is that things are going to be better. And will the market pull back another 10% or 15% in the next couple months? Maybe. Possible. Where's the market going to be in a year, though? Higher or lower than it is right now? I don't know. But my gut tells me, the evidence that I look at, the research that I do tells me, it's probably going to be higher a year from now than it is today. How much higher, I don't know. Could it be lower? Yes, it could be lower. But the probabilities, there is no certainties, right? The probabilities are it will probably be higher. And if I were to put a probability on it, I would say I'm 70 to 75% confident that the market will be higher on December 15th of 2023 than it is right now. If we go out another 6 months and we go out into July, let's just say June of 2024, I'm going to increase that probability to about 80 to 90%. So in other words, the further out we go, the higher the probability things are going to get better. So why are we so worried about what's going to happen next week, next month, or in a quarter from now? Unless we're trying to be heroes and we're trying to predict the future and we're trying to pick the bottom of the market and try to get the best deal, which, by the way, it's a loser's game. I saw a quote the other day, which I've seen many, many times, and it's one of my favorite quotes in our industry. I collect quotes, and I love so many of them. But this quote said something to the effect of, in trading and in the market and investing, what you want to do is you want to arrive fashionably late and you want to leave before the cops show up. So, in other words, you want to make sure you're being a part of the party here, and you want to leave. You want to enter the party fashionably late. So the market's already been going down now. The major market indices have been going down since pretty much January, December of this past year. But stocks within the stock market, so just stocks in general, have been declining since as early as February of 2021. The longer this lasts, the closer we are to the end. And again, I think we're probably closer to the end than we are the beginning at this point. So with that all being said, I'm going to close out for the day. Feel free to share this episode with your friends and family. And if you'd like to discuss your personal situation further, please remember you never ever have to be a client to ask a question. As I mentioned earlier, if you'd like to set up an introduction call to discuss your financial situation, or if you'd like to get a second opinion on your retirement plan, head over to our website at libertaswealth.com. Click on that button that says click here to get started, and somebody will reach out to you. Be sure to subscribe on iTunes, YouTube, Spotify, and remember, you can sign up at libertaswealth.com to not only get these updates, but you'll also get access to the screencasts I mentioned earlier, videos, articles, and other things we send out to our clients, delivered as soon as they're released directly to your email inbox. Be sure to follow us on Facebook. I'm also on Twitter at Adam Koos, as well as Instagram at Financial Surgeon. And as I always say, there's thousands of podcasts out there, and you chose to give ours a listen today. So thank you so much for joining us, and we'll see you next time.
Thank you for listening to the Cash Podcast with your financial surgeon, Adam Koos. To see any charts or images that were mentioned in this show, or to check out additional articles, videos, and other educational resources, head over to libertaswealth.com.